Well, good afternoon, everybody. Welcome to our Short Verticals webcast. I want to welcome each and every one of you. Thank you for your time taking out of your day to dedicate to your education. Now, when you think about short verticals, and that's all we focus on in this webcast, what Greek comes to your mind as maybe being one of the most important Greeks? Delta, theta, vega, delta, vega, theta. I forgot the other one. Vega. In any case, which of those Greeks do you think plays the biggest role with short verticals? We're going to explore that a little bit today and talk about how that could make a difference in deciding maybe what contracts you want to use, what strike prices you want to use. Okay. I am joined in the chat by Barb Armstrong. I'm so glad Barb's here. We're so happy to have her back from her knee reconstruction surgery, Barb 2.0. She's here to help me maybe catch some questions that I can't quite get to. But we do want you to have your questions answered. So as you have them, go ahead, chat those in. I'll keep my eye on the chat. Barb will have my back there as well for any questions might come through. I hope you're following us on X. I'm Connie Hill CS. Barb is Barb Armstrong CS, and we'll post educational content throughout the day, things we notice in the market, things that we might think are helpful for you because or interesting, we'll post about it. So we would love to have your follow. Let's go through our disclosures. Let's get on with our agenda. I have a pretty packed day for us here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and informational purposes only. Don't consider it a recommendation. We'll be using this Thinkorswim Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. Investing involves risk, including the loss of principal. One thing that's different in paper money than a live account is you will not be assigned early, but a live account you absolutely can and will be assigned early on any short options. And they can be assigned regardless of the in-the-money amount. Past performance of any security or strategy does not guarantee future results or success. Now, let me see what you guys said here, all right, as far as maybe what Greek comes to mind as being, it's hard to say the most important, right, but kind of one that you might focus on a little bit here today that could make a difference to you. So we've got some gammas, some deltas, some thetas. Nobody went for vega, although vega can be a consideration. We're going to talk through that. We're going to talk through that here today. So we always want to talk just a little bit about short verticals, what they are, and we want to look at examples out on the platform. And we've got 3 trades that are working right now that we need to discuss as far as management practices. So we're going to go through the new trades first, then we'll follow up on some of those other trades. And if you're paper trading these example trades along with me, you might be coming up with some different questions. That's one of the advantages of being able to paper trade is you come across a situation, you're like, oh man, what do we do about this? And then we can have that dialogue and discussion. So I'm going to encourage you, if you're trying to get really good at this strategy, to maybe do some of these example trades in your paper account. All right, let's head over to Thinkorswim. You guys know, market keeps putting in new highs day after day, new high, new high. And it sounds a little redundant, but that's what's going on. So in our class, our focus is going to be on the short put verticals as opposed to the short call verticals, right? We're going to focus on going the direction of the overall market. And the stocks on our watch list that we use, a lot of them came from the S&P 100 and the NASDAQ 100. Actually, it was the S&P 500, okay? So it's currently up. Let's see, what is that? Just a hair, up just barely 3.68 points. Not a big deal. NDX looking similar, putting in a new high again today. Sounds like a broken record, but it's kind of holding its position, maybe a little bit stronger. Market gapped up. It's pulled back from that high gap, but still looking fairly bullish. All right. So let's see. Noodlebrain says I did a short vertical today on Oracle because you saw a hold, meaning you saw an entry that you consider valid. Yeah, we'll be looking at holds here today possibly as well. Let's take a look at our first example here. Coinbase. Okay, Coinbase is probably the best known name for trading cryptocurrencies. Okay, they've been in a slump, right? They have been in a big old slump. Some of you might look at this and go, oh, is this a cup and handle formation? Well, it kind of looks like it. Let me get my marker to cooperate here. Didn't want to initially. Let's try this. Oh, no. I guess it doesn't want to cooperate. In any case, imagine a cup coming down. Here's the base of the cup, right? Sits on the table, runs up. And one entry point that some people like on a cup and handle is when it kind of breaks out of whatever this mid basing range was to get in there. And I would say that 350 area has been some resistance that today it is just busting through. So we've got a little bit of a breakout. And if you're a technician following that pattern, we would expect the move eventually to get back up to the top of the cup again. So that's up there about 473, so 100 points away. All right, on this. So Jamini says, what is a cup and handle? Oh, I wish my little thing would maybe let me do this. Let me close it and see if I can reopen it, if it'll cooperate with me. It may or may not. Basically, it's a formation. We can see price patterns in formations all the time. In fact, Barb teaches a price patterns class where she'll help you learn what these different patterns are. And essentially, if you kind of follow my mouse here, basically it kind of looks like a cup sitting on a table. And so the top of the rim of the cup is up here. Down here is the base where it sits on the table. And then right now it's starting to build the other side of the cup. And so the expectation is it's going to go back to the other edge of the cup. There may be a little pullback, which we'll call the handle. And then sometimes people get on the breakout of the handle. Okay, so there's some different ways you can trade that pattern. For us today, we're just going to notice that it's a simple breakout above resistance that we might consider using for a bullish trade that some traders might do. Now, we're going to start out here looking at the October 24th. I'm kind of happy in our examples today. We got to look at a lot of different time frames, which is going to help us in our discussion because we're going to focus on theta. I didn't tell you what we're going to focus on, which Greek it is, but we're going to be looking a little bit more at theta today. So as we come over here, it's traded over 10 million shares today. So we love the liquidity in the stock. That usually means we'll find it in the options, but not guaranteed. And I was looking to do here the 350, 340. Let's see if this still makes sense. 350 is at a 31 delta. And then I wanted to spread it out by 2. The reason I wanted to go to the 340 instead of the 345 is because it has more option contracts in the open interest and volume here today than the 45 does. If the 45 had it, I'll probably go with the 45, but because it doesn't, we're going to stick here. We're going to go the 350, 340. Now, I'm going to just kind of click here because I want it to highlight this 350 strike price here. And I'm going to change my columns. These are my columns I typically have up. We'll go back to them again, but we're going to look at the Greeks. So we're going to open up here, delta, gamma, theta, vega. And what I want to point out here is what the theta decay is daily on this strike price. So we come up to the top, we look at the theta, it says it is 44. Okay, I'm going to write down the 44. I'm going to take a note here because we're going to compare. It's changed a little bit from earlier. So it's a 44 delta. Now, what if we said, we could do possibly several of these in the sense that maybe several of them would be contenders to say, hey, it's in the 20 to 40 day window. Sometimes we have to go up to about 50 days. It's in that window. And so we could say, well, we have some at 29, 36, 43 days. I'm going to come out here to the November options because sometimes we might have to default to that because there's not enough interest in the weeklies. So we're going to come out to the same strike price, okay, which was 350. What is the theta decay here? Well, it looks like 0.33. So if we go 3 weeks earlier, or not 3 weeks, actually, it's a little bit more than that. If we go with the October 24th, they have 22 days, the theta value that is going to decay as far as the price on that option is quite a bit bigger. So we've got 33 here compared to 44. So that's a significant number better. You start thinking about the days that add up. You're like, oh, for the same period of time, that other one's going to melt faster for me. Okay, so that's one of the things I wanted to look at here. So let's go back here. Let's put together this trade. We're going to sell a vertical. And let's go ahead and lock this in. This one, I'm going to change the columns back. We're going to do a little switching of columns here today. Want to just look at that probability of the option expiring out of the money, which means success in this trade is about 63% at this point. Okay, and typically we want to target for at least 60%. It doesn't have to be, but that's what a lot of traders may use to consider higher probability. Okay, $1.62 on a $5 wide spread. Would you say that's healthy? Would you say that's one that you'd go, oh, I'm interested in that, just knowing the numbers off the top of your head? So if we have, let's see how different that is from earlier today. Yeah, earlier today it was about, you know what? I need to change the strike price here. We need to get our 340. And now we go. There we go. I told you I wanted to spread it out, and then I didn't do it. Okay, so now I've spread it out. 330 is our credit, which is pretty close to what it was looking like earlier today. So a $10 white spread minus 330, our max theoretical gain, bringing in $330 right into our account as soon as we sell it. The risk on this trade then is going to be what? It should be in the neighborhood of about what? 670, right? That would be our max theoretical loss. So I'm going to just type in that just in our notes, so we know 330 is our max gain. Well, when we divide that out, we're going to be able to see what our percent return is. And Chris is saying, yep, that's a healthy one. Noodle Brains has some advice from ChatGPT to aim for a credit that's 18 to 25% of the spread. So $1.62 is good. That's it. Yeah, maybe an interesting thing that some people might want to consider when they're kind of looking through the numbers, seeing if it looks like it's a good trade for them. So let's take our 330, divide that by our 670 max theoretical loss. That's going to give us a 49% return in 22 days. Now, some people might go, well, why don't we just back off the delta then? And we could, okay? We could back off the delta and maybe take in a lower, a higher probability trade with a lower reward. That is an option. I'm going to stick with the contracts we have because of the liquidity and because I want to stick with this 22 days because of the higher theta value in terms of being able to melt more quickly. Now, in our class, we can risk $1,500 a trade. So if our max theoretical loss on one contract, 670, our max that we can do is going to be 2. So we're going to do it. Now, with getting I'm going to say a healthy return, okay, that 49%, could we be satisfied with maybe not trying to get every little piece out of this trade, right? Could we leave some crumbs on the table and maybe walk away with a big chunk of a big chunk and leave a little chunk on the bone? I'm going to say yes. Okay, so we're going to approach this particular trade a little bit different. We're going to go, okay, we're not going to be a greedy gets. If we get 65% here, we are going to be happy campers. We're going to say, get us out of the trade. So let's change this to a first triggers the sequential. We'll put in an exit order here. So we're going to say create an opposite order. And let's see of that 330, if we get 65%, only 35% is left. So we're going to multiply that by 0.35. It's going to give us a value of 115. So we're going to stick it in here. We're going to say, all right, spread, if you get to that price, go ahead and exit for me. Get me out of the trade. Okay. This particular stock trades a lot in sync with Bitcoin, not exclusively, but if you're trying to maybe look and see what might be going on. I'm just going to pull up the Bitcoin future, which is /BTC. And you can kind of see a similarity in terms of how they look. And so some traders might look at that futures chart just to gauge what might be going on with Coinbase. But we're going to really use the Coinbase chart to make our decisions as far as support and resistance entries and so forth. All right. So that is going to be trade number one. We'll be satisfied with 65%. We're going to hit our confirm and send. We're going to send that to our bullish bucket. All right. Adrian says, so when you put it in your order, do you inform that you're doing a short vertical? Well, when we put the order in, I just did a right mouse click here and said sell vertical. And so, yeah, it's putting it in as a short vertical because it's got this red background. It says credit right there. And so that's kind of how we're verifying that it is a credit spread versus a debit spread. Not sure if that's what your answer is or what your question is. Hopefully I figured that out. If not, say it a little bit different way for me, if you would. Luis says, well, you know, what about a put 350, which is where we started, and a put 345, put 340 in the October 24th for 729. I think what you might be saying is maybe doing the 340, 345, 340 spread instead. And somebody could do that. As I mentioned, I wanted to go to the 340 because of the additional open interest here. And knowing we can only do a couple of contracts, but there's a lot more contracts out here at 340 than there is at the 345. Okay, I hope that answers that question. All right, next up. Oops, let me get something out of the screen. Didn't realize that little guy was there. All right, next chart we're going to take a look at here is some of these, I shouldn't say some of these, a lot of these from our watch list are in the technology sector. Right now, technology really has been an outperformer. Okay, so we shouldn't be too surprised about that. About on September 11th, so about 3 weeks ago in this class, we updated our watch list. And on this watch list, we are willing to trade pretty much anything on it, either bullish or bearish, and sometimes they trade positions. We could trade something, you know, bearish for 2 months, and then it goes bullish on it, and we switch. So this is our watch list that we're using. Okay, so Coinbase, you can see that was the top one up there. We're coming down here to Broadcom, AVGO. Well, what kind of an entry are we seeing here? You can see we've traded in the past. I probably need to clean that up. But we had a nice pop with their earnings. It ran up to a peak and then pulled back here to the 30-day moving average. Looks like here it found some support. Today, it's a hold. Market hasn't closed yet, okay? But if it were to close right this second, this would close above the high of our low candle day here. Visually, we can just see that. So we're going to say, great, we're going to use that as our entry point. Now we're going to flip over here to the trade tab. And let me delete this because we sent our one through. It looked like it got filled for us. And on this one, I want to look at the October 24th here. Look at this open interest, you guys. Can you see those hundreds of contracts? That should make you feel comfortable that if you're selling 5 or 10 or 20, that there's a lot of contracts exchanging here so that it makes it so much easier to get in and out. Look how narrow this bid-ask spread is here. I'll focus on the 325. 710 by 725, that's a 15-cent spread. Ooh, that is delicious. We want to look for those things. Now in this one, what I was looking to do the 325, 320. Okay, 325 is at a 30 delta here, and there's our 320. So I'm just going to highlight our 325 here. I want to go look at the theta for it. So we're going to change it to the Greeks, delta, gamma, theta, vega. And its current theta is 28 cents. So for every day, including Saturdays and Sundays and holidays, it's going to decay at a rate of 28 cents a day. And so we're like, great. Also, there could be some other considerations people might look at. There's 29 days, 36 days, 43 days, up here until 50 days. So there really are a lot of choices here. I'm going to go out to the 50-day window again. And we're going to look at the Greeks. We're going to see the theta column, and we're going to pick on that same 330. Actually, we had, I think we were looking at 325, weren't we? We were looking at, wrong month, get the right one. Yeah, we were looking at 325. So there's not an exact match in the monthlies. It goes from 330 to 320. It skips over the 325. So let's just look at the 330 then. Okay, I'll highlight that row. Similar delta, 0.29, I mean vega, similar, or theta, 0.29 on the theta. And if we go out to the November contracts, out we go. Here's our theta. Here is our 330. It's a 19 delta. Okay, so 19 cents a day or 28 cents a day. Which one's going to be paying you more quickly? Well, the one that's decaying at a higher rate. And so that's why some traders, if they want to, they might pick around in these weeklies because they know the theta value is higher. But if you don't find the liquidity, don't force yourself into it. Okay, if we came up here to say the October 24s and they didn't have a lot of open interest, we would not hesitate to go back to the Novembers. Okay, we really wouldn't. But sometimes there might be opportunities in some of these shorter time frames. Now, Chris says, it's close to the close. Is it close to a hammer? Good question there, Chris. A hammer, it's similar to a hammer, but I'm going to say it's not hammer-ish enough. Okay, a hammer, typically we're going to want to see kind of down at the bottom of the pullback, and then would want to have it have a really long shadow and a small body. Okay, so if that were the case and it was down lower and it was at support, we'd go, oh, okay, we've got a hammer at support. That could be meaningful. And so in this case, I wouldn't necessarily consider it a hammer. Okay, but I think you're getting the idea. Wyatt wants to know what's the criteria for this scan. After this trade, Wyatt, let me show you. Okay, let me just make a note here. All right. So back to the trade tab. We're going to use the October 24 options here. We're liking this theta extra time decay. And so we are going to do the 325, 320. Let's go ahead and hit sell vertical. And it is going to give us a $1.40 credit on a $5 white spread. That healthy? Well, let's go see. Okay, if we come up here and say a $1.40, our max theoretical gain, divide our max theoretical loss of, but make that a divided by, that should be 3.6. That's going to be a decent percent. That's about 38%. Okay, so there'll be some traders that like that. There might be some traders that go, well, it's a 66 probability of success. I like that, but maybe I'd be content to sell a 320 and have a little bit higher probability, right? You as a trader get to decide where your comfort zone is, okay? And that's why it's so important to paper trade so that you can learn that. All right, so down here, if our max theoretical loss is going to be 360, and we can risk $1,500 in any trade that we do, let's see on that. So we'll say $1,500. We're going to divide that by actually I'll just say 360. We can do 4 contracts. Great, we're going to do our 4 contracts here. So let's go ahead and pull it up. And then the next step, are we content to get out? If we get a good chunk of it, can we be happy with not 100% of it? Okay, an example I give all the time is that if you're trading vertical, sometimes the best approach is not to treat it like your toothpaste. If I'm doing my toothpaste, man, I'm squeezing out every little last drop out of the tube. But sometimes that's not the best approach for spread trades because it's really hard to get everything out of it. And you could be in a position where you've got a good chunk of it and you're like, oh, I'm still happy with this. And then maybe it goes negative on you. Okay, and so it's kind of like when you get that opportunity, we're going to put an order there to go get us out of the trade, buy back this spread that we're selling right now. So let's do a first trigger sequential. We've got our 4 contracts in there. Create an opposite order. First one, we did 65%. This one, let's go 70%. We can get 70% of $1.40, then only 30% is left. So I'm going to multiply this by 0.3. We're going to go buy it back at 42 cents. All right. Go ahead. Let's plug that in. And we're going to make it good till canceled. We'll be happy if it finds it for us, great. And sometimes it does. Sometimes we've had a lot of success with that actually in this class of putting in that automated exit and the stock moving, like even before we get back to class again to look at it, we see the stock, man, it already went and hit its target. Yeah, some questions here we need to get to here. First one is where that scan is. So let's go show you where the scan was. I'll show you the day that we did the class. It was on September 11th. So if you go over to our Trader Talks YouTube channel, which we love to subscribe to if you haven't yet, make sure you do, because it just makes it a lot easier for you to find our information, our content. You've got a little button in the bottom right-hand corner of your screen that's blue and looks like YouTube. You click on that, and that just instantly subscribes you. And if you click on it twice, it'll unsubscribe you, so just do it once. All right. Then you could come find the playlist for our short verticals class. And we're going to have to scroll down here a little bit before we see it. Here it is. And so I'm going to go to the playlist here. I'm going to click on the name. Don't want that one. That was the most recent one. And I'm going to go find the one that was just about 3 weeks ago. And it was called Discovering Potential Stocks Suited for Short Verticals. Okay, so it's this one here. It's the third one down. It's the one in pink. It was on September 11th. And that's the very first thing we did in that class was we ran that scan to build the watch list. So if you haven't seen that and you want that watch list, head on back and do it right there. Another question. Lots of questions here. I want to make sure we get them answered. So Adrian says, so when you put in your order, we covered that question. Okay, let me scroll down just a little bit. How do we add a stop loss for an entry plus a target value? If we wanted to, we could have done that on our trade. Okay, let's just recreate it here. Sell our vertical. Instead of doing a first trigger sequential order, we could have done a first triggers OCO and just created 2 opposite orders like that. And then like this one, we could put it back to our 40 cents there, okay? And then maybe on this side, if you feel more comfortable putting in a stop, and some traders do. Some traders don't because it's already kind of a hedged trade. But if you wanted to, and you said, okay, if this thing goes against me about the same amount of the credit I was going to bring in, I don't want to go to a max loss, so maybe you might stick it there at like, say, 280 or something. So just use this first triggers OCO. So hold counts even if it's a red candle. Yeah, let's review that real quick. The red candle means that it right now it's lower than where it opened. Okay, so it gapped clear up there and it's kind of pulled back here. But hold stands for close above the high of the low day. And so we look at the low day and the pullback, and that looks like yesterday. And visually, we can see, at least right now, that the stock, where its current price is higher than the high of that low candle day. Some people will do it as a trade above that price as well. Okay, instead of waiting until the close, they might go, well, if it trades above it, then I'm going to take it. Okay, so that is why the hold still counts. Noodlebrain says, if theta decay is good, why not do even closer in the expiration date in the weekly? You could if you wanted to. What you'll find, the shorter the time you go in, the smaller the credit's going to be that you receive. And so you might not be satisfied with it. Okay. If you're just bringing in, say, something gives you a 10% return, you might be going, no, I want something a little bit beefier than that makes the trade more worthwhile, that you are not risking a huge amount for a really tiny amount. Okay. Can you explain what to do as you expect the price to change to the trade? Well, we're going to monitor it. We'd come in here every day. And let's maybe show you with some trades that we need to touch base on. Okay, let's go to our monitor tab. And let me show you with Gilead. Gilead is one of our bullish trades. And you can see we're down on it right now. Okay, we've got until the 17th before it expires. So we've got a couple of weeks, but I want to show you the chart. Last week, when we were examining the chart, I wasn't convinced that we were wrong, right? If you're not sure that you're wrong in the trade, then you might not want to panic and close it or flip it. And so we got in here. Let's zoom in. We got in here, bouncing off those two support areas of the moving averages. And from the time we got in, it really just does not perform that well. But what we're noticing was this support down here at 110. And so the decision that was made to monitor this particular one was, if it has a significant close below 110, then we do need to say, okay, we're wrong on the trade, and let's get out, or let's go buy back our short put and hope the stock really continues to drop. I'm going to show you another example of that. But interesting today, man, it's been really volatile today. Somebody could have seen it down here earlier in the day and gone, oh man, it's breaking through. Let's get out of this dog. Okay. But it's closing. It's going to close right up here near support again. And so we like to see if support and resistance will do their jobs. And so if we've got a couple of weeks and there's still the possibility that we could find a better exit point, maybe it doesn't go past our 115 like we need it to for our max gain, we're going to look for a better way to exit. Okay, so we're still going to monitor this. If it closes below 110, out we go. Okay, or like I said, we'll buy back the short put. Another one that we're looking at here is Lowe's. And let me open this up for you. On Lowe's, we had a short put vertical going, and it did break support, and it started to drop. Okay, and so you can see right now I only have the long put in here because we said, all right, we're wrong on the trade. Let's go back buy the short leg, which we did for a big loss, with the intent that Lowe's was going to continue to drop, and hopefully that long put would help make up some of that deficit. All right, so we got in here. It was a nice little hold there as well, but it just didn't do what we expected it to. Kind of had maybe some resistance here, certainly pulled back. So it was on this day here earlier in the week where we said, okay, fine. It's really below this 256 support. We're wrong on the trade. Let's let this baby fall. So we're waiting for Lowe's to continue to drop. And, it's up a tiny bit today. It might have looked a little threatening when it was at the high of the day, but it's not there anymore. So we're going to see if this thing can just drift a little bit and help make up for some of that loss where we had to buy back the short put us in overall a better position. Okay, so that's the game plan if any of these go awry. Now, if you're going to do that, one thing you need to make sure of is that you have, let's go back to this page here, that you have enough time in the trade for it to do something. If we were sitting here of 5 days or 4 days or even maybe 7 days, there might not be enough time to really try to make that plan work, to let the put drop. You've also got to, one, know that you were wrong. Trade isn't doing what you thought, the stock isn't. And number two, you've got some time to let that put drop to help make up for it. If it were like 5 days, then we probably would have needed to have just closed out of the trade altogether, avoid taking a max loss on it. Okay, so these are fantastic questions that you guys have. Little Brains wants to know if we're worried it's at the top of the Bollinger Band. That actually wasn't part of our analysis, and there's some other things I want to cover, so we'll leave it there. I'm going to say if you're concerned about it, yeah, maybe watch it, see if it does bounce off that top Bollinger Band and pull back. That could be a factor. Now, Noodlebrain says, do you have to wait for the stock to be going down to get more premium on the puts? But that doesn't matter as long as it's in an uptrend in general. So on this trade with Lowe's, we did a short put vertical. Okay, so we had a short leg and a long leg. And right now we're holding on to this long leg. And when we bought it back, if we go to the account positions here, initially, okay, that was our initial credit on the spread was 286, but this 270 put on it, we sold it for 535 and we had to go buy it back at a loss at 1835. So that's what we're down on that strike price. That's what we're hoping the put drops some more and continues to gain in value, right? Because as stocks drop, puts go up in value. That's what we're expecting on this trade. That's why we're going to give it the time, see if it can drop down for us. Now, say it drops 3 or 4 days, and then maybe it looks like it's hitting some support. It looks like maybe it's going to bounce up. That might be the best we can do to kind of make some lemonade out of the lemons. Okay. Hopefully that makes sense. And Barb, thank you for helping out in our chat here as well with these questions. Now, I'm noticing there is, looks like, was there a survey out here? Yeah, there is a survey. Once in a while, we'll do surveys in our classes. Barb doesn't control it, nor do I, but we like to get your feedback. Man, we love your feedback. We want these classes to be the best for you. So if you will fill out this quick and painless survey, we promise to read everything you write. And I like to incorporate some of the questions you're having into future discussions. So there's 2 multiple choice questions. Just go pop in the radio button, 2 seconds, you're done with that. And then if you want to, you can answer a couple of questions there that communicate maybe some of your needs. Or you don't even have to answer the question. You could say, hey, Connie, I'm struggling with this concept, or this is something that's I'm having a hard time with, or I would love to see covered, then go ahead and let me know so that we can put that in future webcasts. Okay. Again, we always appreciate it when you take the time to do the survey for us. Now, there's one more trade I want to look at here. The other one I do want to mention to you is PanW, and it's just working for us. We're just going to leave it alone. It too has 15 days before it expires. It's in a decent position right now. It's staying above that 200 area where its short strike is. If I just show you the chart real quick. And so we can see, yeah, 200 is that area. That's our short leg. We got in on it looking like a little bounce here, and it's continued to move the direction we needed to. So we're just going to let it work. Okay. Let the theta deliver us. All right. Let's look at one more before we have to wrap things up here today. And let's take a look at, I had some really good ones. Which one should I go with? Let's go with this one right here. Marvell. Marvell Technology, there's been some good news on the semiconductor front for a lot of stocks, and Marvell Technologies is one of those. And what we were noticing on this, and it is on our watch list, is, can you see a pattern going on the chart here? Can you see what I've drawn in here with my white drawing? Actually, I was just using my trend line here. We've got a nice little flagpole. We have 4 days of consolidating in a flag formation, and today's the pop out. And actually, this one could have been drawn even a little bit flat if we wanted to, maybe a flag in a stiff breeze. All right, but same thing, we're seeing the breakout on it. So a lot of traders might like to use that as their entry signal. Let's head over to the trade tab. In Marvell, I did pick around in the weeklies. They didn't have quite as much open interest as I would like to see. And so on this one, we're just going to go out to November. So we're going to go to these November 21s. And I was looking at the 80.75. Let's see if this still looks appropriate here. You can see, look at these thousands of open interest contracts. Oh, that is just such a nice thing to see. Just should make you happy. Good job, you guys that called out the bull flag. So let's go ahead and construct this. We don't have time to look at the theta. I'm going to challenge you to go in and look at the theta here. and compare it to the theta in the October 24th. Since I don't have the time to do that in class, that's going to be one of your assignments to do, okay? So let's go ahead, let's hit sell vertical. $1.52, is that a pretty decent return? Is that something you could be satisfied with? Now, in this case, we're going out further in time, and some people like to have a better return when they're going out further in time. This one's about 50 days. Now, a 50% return might not be super realistic, although some traders like to get 1% a day. To do so, you might have to play something a little bit more aggressive than a little bit more conservative. But right now, this has a 63% chance of expiring out of the money. We like that. And let's go ahead here. 5 minus 152 is going to give us what? 3 instead of 350, that's going to be what? 348. Okay, so 348 is our max theoretical loss. Our theoretical gain is 152. That's going to put us in a neighborhood close to 40-ish%. Okay, maybe just right on it. Let's go ahead. Let's build our order. Let's prepare to buy the contracts back as well. So if we can risk, say, essentially $348 a trade or a contract series, we can do how many contracts? We can do 4. So we're going to do 4. We'll create an opposite order. And on this one, let's say if we get, so 152 is the credit here, times, what if we get 70% here? Okay, that means 30% is left. We'll multiply that by 30, and we'll go buy this thing back at 45 cents. We're going to put it in there. We're going to put it in as a good till cancel. And again, we're going to use the same rules. We're going to look at it every day. We're going to see if there's a technical violation, that the trend has changed, it's put in a lower low, something of that nature. Then we'll be looking at it and looking to make changes. But we've got 50 days, so more likely than not, nothing might not be done right away on it, right? We're going to have to let time decay. The theta value is going to be longer, so it's going to take longer for that option premium to decay for us. If you're doing 1 or 2 contracts, you might find something in the weeklies that you're comfortable with. I like to see just that massive open interest on that one. All right, well, my time is up, you guys. We crammed in quite a bit. We did 3 new short put verticals going a bullish direction. So we got into Coinbase, we got into Marvell, and let's see which one didn't get filtered yet. I guess it did. All 3 of these, Avgo, I forgot to put Avgo, Broadcom, in our bucket. So I'll move that after our class is over up to our bullish short verticals bucket. So we put on those 3 new trades, and we looked at our trades that are going on right now. PanW, we're just going to let it work. Lowe's, we went back and bought the short put. So, man, we're needing the stock to drop now, make up that difference for buying that short put back at a loss. And then on Gilead, the jury is still out. It is sitting right at support. If it breaks it, we will have to become bearish on it or defensive. If it bounces up, support does its job, then we're hoping to find a better exit point on that one. All right. Coming up next is something that's a little bit more advanced, but a lot of you are ready for it, okay? And that's ThinkScript Studies. Mike Fairborn does a fabulous job with that class. I love some of the stuff that he's teaching you in it. And so if you are feeling like, yeah, I could be a little bit more advanced today, take in something that maybe is making you stretch a little bit, I'll encourage you, come back right at the top of the hour for Mike's class. Now, again, appreciate you filling out the survey. We always appreciate the time you take to fill that out for us. Barb, thank you for your help in the chat. If you found this helpful today, go ahead and hit the plus button or the thumbs up button. Now let's know, other people know you found this of value and it might be helpful for them as well. And then Barb and I would love your follow on X, Barb Armstrong CS, Connie Hill CS. All right, you guys, we'll be back right at the top of the hour with Mike's class. We'll see you there. Bye-bye.